Hello and welcome. This is Business Incorporated coming to you live from our Lagos studios. I'm Chimizi Obi Iwago. On the show today, IMF mission to visit Tunisia next week to discuss fifth review of loan. And the IMF Executive Board concludes regional consultation with West African Economic and Monetary Union. Plus, Zimbabwe expects to raise $350 million selling state companies. First, the markets. And major markets we track here were in the sea of red at intraday. The South African market was mostly hit, down 1.75%. Egypt was down 1.46%. The Nigerian index was also in the red, 0.49%. Kenya closed in the green on Monday. And in the Middle East, it was mixed sentiment at intraday. Saudi Arabia's stock index edged down 0.21% after closing at a near four-year high on Monday, which was its first day of a member of FTSE Russell's emerging market index. In Dubai, the index was up 0.82%, rising for a third straight session, with most gains coming from real estate shares. The Abu Dhabi index was up 0.25%. Qatar will no longer permit FAB to provide services for new customers in Doha amid a probe over alleged currency manipulation after the Gulf Rift reported earlier this week. Qatar's index traded down at intraday. And in Europe, stocks were higher in the morning as investors monitored heightened Brexit uncertainty and awaited the Federal Reserve's latest monetary policy meeting. Well, I guess there are more stories out there on the wires driving the market. Let's bring in Conrad to tell us more about those. Hello, Conrad. Good afternoon.
Good afternoon, Chimmy. Hope everyone's fine in Nigeria.
We're all doing great. Thank you. Now, what are the big stories driving investors and traders' sentiments across equity markets this Tuesday?
Well, Jimmy, one of the most important events this week for the financial markets is the Federal Reserve's meeting of the Open Market Committee, which starts today and goes until tomorrow. Of course, around this date, around this event, people on the markets everywhere in the world are discussing what will, the direction of monetary policy be in the United States. No one, of course, is expecting an interest rate change tomorrow, but many, of course, market participants will be focusing on whether or not the Federal Reserve continues its accommodative stance. It's widely expected that the Fed will do so, that it will talk about, how uncertainty in the U.S. economy are causing the Fed to continuously be cautious. There's more and more talk on the trading floors that the Federal Reserve in the course of this year will probably end or at least slow down the, scaling down of its large balance sheet, which is basically a step towards, a more accommodative monetary policy, or at least the assurance that monetary policies in the U.S. will not get tighter. Brexit is, of course, another big topic of talk among traders, with the Speaker of the House of Commons in London forbidding the Prime Minister, Theresa May, to bring her Brexit deal before the House another time. This event, though, is less nerve-wracking than one might think. Look at this. Look at the German share index, which is climbing higher nicely today. Traders I talked to told me that as long as events don't make a no-deal Brexit more likely, markets can live with it. And, well, what just happened in London seems to be more of a prolongation of Brexit and not making, a no-deal Brexit likely.
Now, on another development, Conrad, tell me what reactions are coming in from the DAX trading floor and in the Germany's media over New York Times report that Deutsche Bank lent more than $2 billion to U.S. President Donald Trump.
Well, shares in Deutsche Bank are significant losers today. After, yesterday they were big gainers after those merger talks became official of Deutsche Bank and Commerzbank. Today, a little bit of profit taking, of course, which is made a bit stronger because of those reports in the New York Times, which do not come up with major new facts. They just summarize a lot of facts that have been out there for quite a while. Of course, on the other hand, it's interesting read, and many people on the trading floors here in Frankfurt too have been reading it. I mean, the story basically is the story of a very, very shady businessman at the time, Donald Trump, and a German bank so eager to get into business in the US that it sometimes forgot how to do business and whom to do business with. One story I thought particularly interesting: Deutsche Bank is reported here at the beginning of this century to help Mr. Trump and his casino business to sell bonds to customers, also customers of Deutsche Bank. Then Trump went bankrupt with his casino business, which means that all of those buyers of those corporate bonds lost the entirety of their investment. This is, traders say here, basically a story with the, you know, greed eats brain punchline. A very bad story, of course, for Deutsche Bank, but also a bit of a story of the past. Deutsche Bank has for a long time tried to really become more serious again, as a lesson, of course, of the financial crisis.
Right, tell me, how is the IPO market getting started off in the new year? Because right now it looks like a sleepy one.
Yes, absolutely, Jimmy. It's been a very sleepy one, with Volkswagen here in Germany, for example, saying that it delays the IPO, the planned IPO of its, you know, lorry or truck division, Traton. One big IPO not happening here in Germany. I have to say, though, that at least there's hope here on the trading floors that the IPO pipeline worldwide will be getting a bit fuller in the weeks to come. In Italy, we have the payments firm Nexi, which is planning an IPO worth up to 2.7 billion euros. And then, well, in the US, there's a large amount of blockbuster IPOs that we can, you know, expect. Lyft announced its IPO, or started the IPO procedures. This ride-hailing service, that's the word, is estimated to be valued of up to $20 billion US. Then Uber might follow in May with a valuation of up to $120 billion, which would be the biggest IPO ever. And well, also Nigeria is the game, as you know, with Jumia, you know, this internet portal that is planning its IPO in New York as well. Also a very interesting story for Germans, because the German incubator Rocket Internet is one of the large shareholders of Jumia. So, of course, the started has been starting slowly this year, the IPO year, but we might get into business soon.
Anyway, Conrad, let's keep an eye on Powell and his team, and of course, Brexit. Hopefully, we'll talk about that tomorrow. Enjoy the rest of the day. And shares in Asia were tepid today ahead of a closely watched meeting by the U.S. Federal Reserve set to kick up later in the day stateside. Mainland Chinese shares were mixed on the day, with the Shanghai Composite slipping 0.18% and the Shenzhen Composite advanced 0.176%. In Hong Kong, the Hang Seng Index rose around 0.1%. Japan's Nikkei 225 closed slightly lower, 21,566. Over in South Korea, the Kospi closed fractionally lower at 2,177 points. Meanwhile, Australia's ASX 200 closed fractionally lower at 6,184 points. And U.S. stock index futures traded higher, broadly supported on expectations the Federal Reserve could strike a dovish turn later in the session. At around 5:30 a.m. Eastern Time, Dow futures pointed to a gain of more than 100 points at the open. Futures on the S&P 500 and Nasdaq were also higher. Market focus is largely attuned to central bank expectations, with the Fed due to kick off its two-day policy meeting on Tuesday. And away from the equities markets, and back here, the International Monetary Fund has welcomed the continued strong growth of the West African Economic and Monetary Union despite the ongoing challenges, and commended the authorities for the processes made in implementing banking sector reforms. At the end of regional consultation with the West African Economic and Monetary Union. The IMF executive directors, however, noted that the medium-term outlook is subject to downside risks, including those from rising public debt burdens and highly external current account deficit. They emphasized that continued fiscal consolidation, more effective monetary policy transmission, and further financial and structural reforms are needed to support private sector-led growth and reduce vulnerabilities. In the meantime, an International Monetary Fund mission plans to visit Tunisia on March 27 to discuss the fifth review of a loan program with the country. The visit comes 2 months after the government raised the wages of about 670,000 public employees, a decision the IMF had discouraged in order to cut Tunisia's budget deficit. Tunisia struck a deal with the IMF in December 2016 for a loan program worth around $2.8 billion to overhaul its ailing economy. It included steps to cut chronic deficits and trim bloated public services, but progress has been slow. All right, on domestic commodities market, we will be talking about goat. Nigeria has the largest number of goats in Africa and the third largest in the world, estimated at 78.04 million heads of goats. However, Nigeria consumes about 365,086 tons of goat meat and produces about 278,051 tons. That's a big gap there. Let's know why this is so and the way forward. We're talking to Tobiloba Ogunbelu, one of the research analysts with Financial Derivatives Company. Hello, Toby. Thank you very much for coming through to us.
Thank you for having me.
Nigeria consumes or seem to consume more goats than it rears. Why this demand gap and how can it be bridged?
So goat meat is extremely important for, is an extremely important source of protein. And for an economy to grow, the demand for protein definitely increases. So goat is also a delicacy that is consumed in different forms. We have asun, we have isewu, we have goat meat pepper soup and the likes. So all this because of the fact that it is consumed in different forms, and the demand for this commodity, the demand for this food item rather, increases. So this demand gap of about 90,000 tons is being met by subsistence farming. So we've seen a lot of people rear goats domestically. We know that a lot of joints and restaurants, some of them have their own goat farm in which they rear their goats, and they also use it for consumption too. So this is the reason why the demand gap is being met by subsistence farming.
Okay, now talking about, you did mention the spiced goat head, that's the issue. Now the price of goat meat fell by 15% in kilograms terms. That was in 2018. At the same time, this spiced goat head, which you called issue, spiked up by 10%. Why this distortion in prices?
Well, this is an anomaly because we know that issue is a food item that is not usually consumed often. So it is, like I said, it's a delicacy. So the reason for this anomaly could be, one, the demand for isewu might have increased. Then two, it could be that this joint and restaurant are trying to play a margin game. So maybe they want increase in the margin for the sale of this commodity. So these two factors could be the reason why there's a price anomaly.
Now, what has been the impact of this goat meat price fall on substitute products like chicken, turkey, and fish?
Okay, so we know that there's a direct relationship between prices of commodities, there's a direct relationship between prices of substitute commodities. So we as the price of goat meat decreases, so we expect the demand for its substitutes such as turkey, chicken, and fish. We expect the demand for this commodity to reduce, and if this happens, the price might also decline.
All right, thank you very much for your time, Tobiloba. Tobiloba is one of the research analysts with Financial Derivatives Company. We take a break now. When we come back, we cross over to the Nigerian equities market for update. Do stay with us.